All right, welcome back to the show. Today I've got my friend John Lindsey with the Lindsey Storage Group, and want to learn more about his backstory. I know obviously he's a self-storage broker. My opinion, one of the best ones. Not just because he's on the show, but I do believe he is one of the best ones. But otherwise, John, welcome to the show, man.
Thanks, man. Appreciate you having me. Long time overdue.
Absolutely. So I like diving into people's backgrounds, seeing kind of where you come from. What you're all over the place. I know you live a couple different places, but tell us a little bit about you, where you're from.
So super quick background, born in Dallas, Texas, raised in Durham, North Carolina. Really spent the majority of my life there. Went to college in Charleston. And then since then I've lived in North Carolina, lived in Tennessee. Now we're down in Tampa. But I grew up around the storage business my whole life. My dad was a developer. He built his first site in Dallas. I think it was 1969. So,
wow.
Definitely an OG in the space. And whether I liked it or not, I was getting dragged to construction sites at a very early age and, getting popped around to meetings, things like that. So it was just kind of normal dinner talk conversation for us. I really didn't think much about it. I don't think any kid does when they're growing up about, what they want to do as an adult. But, I started pouring concrete with my dad at an early age and working sites and stuff and doing site visits and secret shopping and, kind of coming up through the business. And, my dad was 55 years older than me. So when I was going through college, he was in his 70s and he's like, look, I'm basically doing one project a year to kind of, stay up to date if you want to get into the construction business. And coming through school, I was just like, man, I hate pouring concrete. Like, this is just not, it's just not for me. So I told my dad, I was like, I think I want to get in the brokerage business. I was like, I know a lot about storage. And I was like, I'm a little bit more of a deal guy. I really like helping people and seeing things through and seeing both ends of that process. So my senior year of college, I kind of got all my ducks in a row, did my first deal March of 2012. So like right before I even graduated college. And we've been off the races ever since. It's been a wild 12 years. Never thought I'd be where we are today. We've got team all over the country. We've done deals all over the world, and it's grown a lot more than what I thought. And been a very exciting past couple of years with COVID bubble and everything. And we've got some rate cuts behind us. So lots for us to talk about today, but we've been very, very thrilled with what's happened to date and feel very blessed about our path to where we are now.
Sure. So I definitely want to dive into your backstory, but 1969 was when he built the first one. So I've got one that was built, I think, in 79. I was told it's the oldest in that town, and it's concrete block. What did they make? What was that one out of? Any idea?
Concrete block, for sure.
Yeah. Is it still there? Do you know?
It's not, actually. Definitely. I mean, you think about the landscape of DFW from 69 to today. I would argue most of the original properties my dad built have been, torn down and skyscrapers thrown up on them. Yeah. It is cool, though. The last portfolio my dad developed with one of his partners was in the 80s and 90s. And the grandson of that partner still owns that portfolio to date. And he and I are very close and still talk often. And it's fun because, I'm the oldest brother, but he got to work directly with my dad for about a decade as well. So kind of nice, feels like an older brother who shared a similar experience with my dad. So we're kindred spirits. So it's fun to hear war stories and be like, well, I'm not the only one who experienced that with my dad or saw that firsthand. So it's cool to go back and see that product too, as well. And know that, something he did 30, 40 years ago is still standing.
For sure. No, it's very cool. All right. So I know I think you went to college for swimming, right?
So I got offers to swim and run track in college.
Okay.
Decided.
What'd you run?
I ran the 100 and the 200.
Oh, nice.
And I swam the 100 back. That was my jam. And I decided to do neither in college. I decided I wanted to go have fun for 4 years. So I went to college in Charleston. Felt like I was on vacation for all 4 of those years. Had a great time, a lot of fun. My dad played college football, and he's like, John, he's like, you don't want to play a sport in college. He's like, it's going to eat up all your time. He's like, go have fun. He's like, it's the last time you get to do it before you're an adult. And, and I've mixed reviews. Like, there was a part of me that wanted to kind of hold on and play sports and have that lifestyle. But I do not regret my time spent at College of Charleston. Was very involved in my fraternity and with the campus and had an absolute blast and wouldn't trade it for the world.
Yeah. Well, and I know you're a disciplined guy. And we were talking, I think it may have been the first time we met. I remember you said, well, a couple things. It was like, I forget what time, maybe 6 p.m. We're in Vegas. So 6 p.m. Vegas time. And you're like, yep, I got to get to bed. So whenever you travel, this is what you said. Whenever you travel, you try to stick to your time zone that you live in.
Yeah.
I'm like, who is this guy? This is insane. And then you were telling us about how you were a swimmer. So apparently in high school. But talk about the discipline, the things that you learned from that. Cause obviously I think you said you were swimming early in the morning, like 5, 6 a.m. every day.
Yeah. So I swam year round for over a decade. You had to be in the pool at 5 a.m.,
Jeez.
5 days a week. And then we had practice after school for an hour and a half. So I was in the pool for practice at least 9 or 10 times a week. And then Saturdays you had a 4-hour practice. So it was pretty all encompassing. I think I got a little burnt out on it. That's why I decided not to really do it in college. I love swimming, but the amount of, some of the kids on my team like swim in the Olympics and stuff. Like they went to Texas and they're just freak athletes. I was a good swimmer, but they were next level. And I just kind of was like, if I'm not going to do that, like what's the point? And growing up as well, I also enjoyed every other sport under the sun. I played golf and tennis and I surfed and skated. And I just never was really a one-trick pony. There's a book called Master of None, and that's how I've always felt about kind of everything I do. I'm like, I'm really good at a lot of things, but I'm not great at anything in particular. But I really, what I did enjoy about it growing up, as you said, was like, it created such a level of discipline and focus for me. I really realized that by like putting in work and like setting boundaries and creating structure for myself, that I like totally thrived in that environment. And even like in high school, I remember when I started working out, I was 14. I was a late bloomer. I graduated high school. I was 5'7", 165 pounds, maybe soaking wet. And I'm, 6 foot 230 now. I was really late to the game. So I was like, well, I got to start working out in high school and putting in those hours and getting up early and staying dedicated. And I think it's kind of my grounding force for everything now. When I'm on the road or when I'm stressed or when I have anything going on, my wife knows I go into like default mode. I'm like, I'm going to go work out for a little bit. Like it is my mental callousing exercise. And it just kind of turns the brain off for a little bit, allows me to really just kind of refocus and recenter. And, I tend to, live in the puke or pass out mentality. I was like, I'm going to push myself at every workout as hard as I physically can so that I don't have room in this brain to worry about things that don't really concern me at the end of the day. So yeah, it has been such a great thing for me over the years. And I think especially now, we're in our 30s. To me, having set this tone 20 years ago now, I'm so grateful that I did, because I hope to be this fit when my daughter is, in high school or in college. Like my life goal is to back squat more than my kids do when they're in college. And you don't do that by starting when you're 50. You start it, when you're 30. So I got a long way to go, but I'm loving the process.
No, that's awesome. That's awesome. And I love talking about this stuff because I think there is a correlation between whether it's sports or something else, but I think you have to grab onto something that you can get confidence in, right? You're around really good. Like you just said, you were on a swim team with Olympian swimmers. Yeah. You maybe weren't the best, but you proved to yourself that you could do it. Correct. And you're still sticking through that with working out. And I know I still do that with stuff. How much do you think that affects you with confidence, with anything else, just grabbing on to doing something physical? And, how does that change your life?
I think twofold. One, there is a part of quieting the mind that comes from fitness in whatever capacity. There's a scientific dopamine release. Your body responds well to physical activity, period. But I think too, there is a level of confidence that's instilled when you're checking boxes. It could be learning a new language. It could be committing to a new social group. It could be, a hiking challenge. It doesn't have to necessarily be the intensity level of, you don't have to be David Goggins. You don't have to go run 200 miles to check that box. But I think when you set personal goals for yourself, no matter how small they are, and you check those boxes, you start to build that flywheel. And when that thing is moving, there is nothing that can get in your way. And I tell people, when you look good, you feel good. When you're hitting the gym, you're eating right, you're making good decisions, you're sleeping well, like it's really hard to kind of get in your own way at that point. You're cooking and you don't want to stop that feeling.
Yep. No, that's so good, man. Yeah. The goal checking that's gold. I love that. Cause that's how simple it is, right? You just, and it doesn't have to be sports. It could be something else, but as long as you're checking off goals, you're building confidence, you're building systems within yourself, and you can parlay that into anything else in life.
Yeah. And I think as we've talked about, John, it's, having grown up in an environment where it was fostered for us, one of the hardest things as an adult is creating that environment yourself and setting those goals and those trends. But, you said it starts small, man. That's what it's all about. Like, even if your goal is like just walk a mile tomorrow, like just like doing it and then be like, cool, I did that. What's next? And I constantly find myself like setting these like mini waterfalls for myself. Like, gotta hit this, gotta hit this, gotta hit this. And I just think that, life is meant to be purpose built. You got to have boxes to check. If you're not growing, you're dying, and I think it applies to everything we do, but those little things add up over time. And I think it's really what's kept me going at the end of the day. Even, whether business is good or bad or sideways, I'm like, at least I can go work out. At least I can do this. And I think it's been my real grounding force over the years.
For sure. Well, there's probably something in you, whether you think about it or not, there's probably something in you that it's like, all right, if I go work out, it's going to change things for the better at some point.
Yep. Well, and that's, Einstein said the definition of insanity is doing the same thing every day and expecting a different outcome.
Yep.
So I'm like, well, let's control the controllables. What do I actually have control of in my life right now?
All right. For those of you that are watching on YouTube, you probably noticed that we've changed clothes, or else hopefully we have changed clothes. I may be wearing the same thing. I'm not sure. We did have a couple technical difficulties a few weeks ago. So John is gracious enough to come back and finish the show here. And I didn't want to redo it because he was dropping a ton of great stuff the first 12 or so minutes that we did. So we're going to pick up where we left off. And that was, John, it sounds like you sold your first storage deal while you're still in college, towards the end of college. Is that right?
Yep, spot on. And thanks again for working with me. We've been dealing with a ton of hurricanes down here, everyone. And we had Helene, which cut out our Wi-Fi, which is why we bailed the first one. And then we had Milton come through. So we've been out of pocket for a couple weeks, but we're back now and super pumped to do this with you, John. So thanks for having me. But yeah, if we back up to, May of 2012, sold my first deal, Somerville, South Carolina. I remember it was $900,000. Buyer paid all cash for it. And I think they bought it like a 12 cap. I mean, it was like, we're coming out of global financial crisis. Storage is not sexy yet. Buyer group out of North Carolina took it down, and it was a weird process and a weird deal to get done. But I since transacted that deal 3 more times with the buyer and seller groups over the years. So I've seen it evolve and expand and everything like that. So it's been really cool to see deals like that. And I feel very fortunate to have touched deals like that time and time again and see how much they grow and evolve over time. But I mean, man, in those 2012, 13, 14, we were selling and buying a bunch of, 10 plus cap rate deals, and like truly 10 plus cap rate deals. And we had some listed that we couldn't get rid of. And man, what I'd give to see those again today. It was a wild time.
Right. So I love digging into especially new businesses, and I think this will probably tie into a lot of real estate investors too. So how'd you find that first deal? Remind us. I think you told us, but remind us.
Yep. So it was listed with a general commercial broker down there. I think they'd had it on the market for like a year or two. I was at College of Charleston. Again, grew up in the business, familiar with it, was looking for my first kind of foray into brokerage. And my dad had been working with an investor group out in North Carolina. I said, hey, found this deal down here. Actually, I think it's good. I didn't know what I didn't know. So I was like, I think this looks good. And so, got them to look at it. And, it was a long, I think they asked for like 120 or 150 days to get it done. And it was a lot, dealing with back and forth, wrapping up college classes and graduating and getting that thing closed. But I think we closed like the week after I graduated college or something like that. I mean, it was like right there in the mix. So it was fun, but like what I thought was a big deal and like a lot of money then, and just like the way things evolved over time, it's pretty funny to look back at it now. But I was thrilled to get it done. I was pumped, and I thought I had just like done the greatest, biggest deal of all time. And it's just so funny to see how that transitions over time. But it was cool to knock that one out, and especially in my backyard at the time, living in Charleston, I had a good feel for the market and was happy to get that done. And, again, I think the last time I sold that deal for a group, it was up to like 1.8 or 1.9, and they had added 30,000 feet and expanded it again and bumped the rent roll up. So it was pretty cool to see that progression.
Yeah, that's cool. So how did you list that property? Did you have a buyer?
I had a buyer for that one.
Okay, so that was easy. So let's talk kind of how you transitioned there and kind of made this thing a business. Did you see the money and you're like, yeah, this is going to work out. I'm going to go hunt for more deals. How did you go from there?
It's hilarious. I remember I sat down with my dad. I'd come back right after college, and I rented like a little office space, like a 10 by 15 little office place for me to go work. I remember sitting down the first day and being like, shit, like, what do I do now? Like I had no idea. Like I had never worked.
My paper, I got my pen. Let's roll.
Yeah. I literally never worked at a brokerage firm. Didn't know what a cap rate really was. Didn't know how to do IRR calculations, like nothing. And my dad came from the development era where like he'd call the bank, like, hey, I think this corner parcel is gonna be great for storage. And they'd be like, cool, how much money do you need? And he just like went off of gut feeling. Yeah. And like at the time, storage was still open enough to where there was enough room to make air. And so I think like that shit just worked for a long time. So like my dad also didn't know how to do like IRR calculations. Like that wasn't a thing for him. So, I really I had to learn the hard way. I fumbled through a ton of deals and like stumbled my way through some projects and stuff. But I remember my first big listing at the time was just south of Pinehurst, North Carolina. I'd done like a mailer to a couple sites in North Carolina back when no one was really doing that. Got an owner. He was an ex-banker from Charlotte, just wanted to get out of his deal. And it was interesting because at the time, I think the site was doing like 13 grand a month. By the time I sold it for the ownership group on the back end, it was doing like 35 grand a month. And he told us we'd never make that happen, blah, blah, blah. And so it was cool. Again, I got to see these deals on both sides and watch the progression. But all that to be said, I remember when I sat down with my dad and going through this process, I closed like 2 or 3 deals my first year. And I thought I was like the cat's meow. I was like, this is it. My dad's like, boy, you got a long way to go. Like he was like, you have no idea how much it costs to actually like run a business and hire a team and really get this up and running. And I absolutely did not. I had no idea what the value of $1 was in growing a company. And I had to make some things stretch those first couple of years. I was scrounging for pennies to, being bone dry in between projects and deals. And I feel like it really took me 5 years to get my footing. And had I gone to a bigger shop, I probably would have cut my teeth in 12 to 18 months and learned the tricks a lot faster and figure out how to build a package properly and all this shit. But I appreciate the process I went through that much more because I had to learn the hard way. And I think that is what is really stuck with me over time. And now, like when I talk to my team members or people I work with, I'm like, look, I had to learn the hard way, and I'd rather you not like do as I say, not as I do. Right.
It's funny. I was at a mastermind last week in Phoenix, and topic came up about should you? I don't remember if it was starting. I think someone was thinking about partnering with a couple guys to do a flipping business, and somehow we got on the topic of should you hire everything out? Is it more beneficial to kind of start in the trenches and do everything yourself? And I'm like, listen. I started with one single family rental. I did everything on that rental, every piece of rehab. I rented the place out. I bought it. I ended up selling it. I managed it. I did everything. And I think, obviously similar to what you did, I think there's power in starting a business and doing everything. Because then you know what you're looking for when you're hiring. Not only the type of person, but the skills they need, the things they're going to be doing. What was your first hire? When did that happen?
Well, I'd like to back up on that note for a minute. You know,
Yeah.
it's interesting talking about doing everything, learning the hard way. You know, I sat behind the desk as a kid and like rented storage units at projects my dad was building. I poured concrete. You know, I've done every side of that. So I think by the time I got to this stage of brokerage, something that I didn't realize was as much of a skill at the time in talking to these owners, they're like, you've only been doing brokerage for a year or two. Like, how do you know so much about this? And I didn't realize how much value I had really collected over the years, like doing the stuff that no one really wants to do. And like, and I, at the time, obviously when you're like 14 or 15, the last thing you want to do is like sweep out units in a storage facility. But like, I'm so grateful for that. Not only because I got to spend time with my dad and hang out, but like I learned so much of the business from an operational side going through that. And it has paid dividends for me moving forward. I think it's like one of the most unique things we bring to the table with our team is that I have operated stores. I have built them. We have managed them. Like I've seen every end, just like you said, you've probably scrubbed toilets at a rental property. Like it makes you appreciate that whole process a lot more. And so as we were growing out, you know, started with some simple like back office hires. You know, I know enough to be dangerous in a lot of categories. There's a great book called Master of None, and that's how I feel about my life. I was like, I'm pretty decent at a lot of things, but I'm not really good at, you know, bookkeeping and back end. So I was like, I need support team to like help me focus on what I do best. Because I see my job as rainmaker. That I am an irreplaceable asset in creating new business and promoting my company, because it's at the end of the day, it's me. And at the time it was just me. And so I really hired some staff that would help me grow and build my team and make sure that I was checking all the right boxes on the back end and not overlooking anything or missing anything. And I think setting up that foundation up front was, you know, it's a big bullet to bite for any entrepreneur, and saying, hey, instead of me taking this check and you know, really reaping what I've sowed for the first time in my career, I'm going to reinvest in my business because I want to be successful for 10, 20, 30 years, not just the next 12 months. And I think that's something that my dad had instilled in me. And again, it's tough when you're, you know, early 20s and you get your first big paycheck and you're like, shit, I should really put this in the bank and hire some team as opposed to just taking it yourself, you know? And I think that was one of the best things I've done, though. You know, I can really proudly say we've never had to let go of any team members. We have continued to grow every year. Everyone who's been with us has stayed with us. Like we've been super fortunate in that regard. So it's been great to build a team very organically that has continued to propel our growth. And I think you can ask any of our brokers too. All of them have really like fallen into this team through one path or another. And it's just worked out tremendously. Like we've been very fortunate in that regard. And I think in focusing on like what's been most important to us and how we grow and maintaining our culture and personality through that, we've just attracted the right talent over the years. And I think that slow, steady growth approach while maintaining that balance has been tremendous for us.
Yeah. Well, and I can tell from the outside looking in that you guys have a great culture. And it's funny, you going through that whole process, how relatable it is in different ways. But I remember, and this has come up more often just because a lot of buddies of mine are probably on the same type of trajectory. And we kind of got started in real estate investing around the same time. But it's like we got started chasing money. We wanted time freedom, right? No different from you. You were just chasing money. We didn't really, I don't think most of us thought about, you know what? I'm going to start a business. I'm going to be a leader. I'm going to be a CEO. I have to now have managerial skills, delegating skills, like all these skills that you don't really think about. Yep. We were just chasing the money basically. So how'd your progression look like? Did you have to hire managers out or did you just kind of learn on the fly?
Yeah. I mean, a lot of tough lessons learned, you know, along the way, and, you know, working with people and trusting people, and, oh, I didn't have this right document in place. I'm not going to make that mistake again. You know, a lot of just like kind of just eating shit sandwiches along the way. I mean, just like tough lessons. But again, I tried to take it with the approach of like, got it, won't do that again, like hire the right people to ensure that this doesn't happen. And I think one of the best things that I did in top of building the back office is I found the right attorney that also is, you know, at the time was growing his career. We've been married at the hip since then. I mean, almost the entire time I've had Lynn self-storage. I think he started working with us the year after, but he has just been kind of a CYA for us. And I think, again, like, you get what you pay for. Like, you hire someone a little more expensive, or you pay for back office staff a little more expensive, but like, they're not going to go anywhere, and they're going to ensure that you set yourself up for success long-term. And I've tried to not cut corners in those categories. It's like buying insurance. You hope you never need it, but you're glad that you do when you do. So I think, putting the right people in place and getting the right people on the bus is the most important thing, like early in your career. Because if you don't have that solid foundation, no matter how good you are, like, you can't do everything. Just like, I'm sure, if you've seen, as you grow your business, like, you are the salesman or the front man or whatever, like, you can't wear 10 hats and raise a family and take care of yourself and go to the gym and go to church and be a good community member. Like, you just don't have enough burners in your life to keep all that up. So you have to ensure that you have the right team behind you to make yourself be successful too.
Yep, for sure. Well, and you made a good point in there that I want to make sure people don't overlook, because I see it a lot, especially the first couple of years of real estate investing, is people want to go cheap on legality things, whether it's a storage lease or it's a purchase contract, anything like that. I've had so many people ask for my purchase contract. I'm like, no, you're not in Ohio. Why would you want my purchase contract? Go find an attorney, quit being cheap. And like you said, CYA, like, that is the most important thing that you should do, especially starting off, but along the whole journey too. Don't be cheap with an attorney, CPA, anything related there.
They will pay for themselves 100 times over. And it's funny. I've had owners who are selling like 8-figure storage facilities who are like, nah, I'm not going to use an attorney. And it has put them in the ass every single time. And I'm like, you have no debt. You're about to make 10, 12, $14 million. And they're like, you're cheaping out on a $20,000 attorney. I don't get it. I will never get it. It's probably my biggest ick when I'm dealing with someone. I'm just like, please make your life easier, my life easier. Like, you're going to protect yourself to the nth degree. And it's the best investment you can ever make. And I think, again, especially as you're setting up processes and procedures and getting rental agreements in place and hiring team members, like, you just want to make sure everything's buttoned up. And again, it goes back to just like investing in that foundation and making sure, like, as you grow, you're doing the right things. Because once if you're 10, 15 years in and you've got 10, 20, 30 team members, it's hard to go back and fix that foundation. You really got to do it right up front. And so, like, spend the money, take the time, grow slowly, hire the right attorney, or, get the right insurance, whatever you need to do to, like, be protected. And on a parallel note, here in Tampa, flood insurance for your house, maybe $1,000. A lot of people are like, I don't want to spend the money. Well, as we just saw, unfortunately, with a couple big hurricanes, I'm like, listen, we live in Florida on the coast. Like, there's a chance that we get a big hurricane. And if you get $250,000 in flood damage, like, versus just paying the $1,000 a year premium, like, I've never understood the risk reward profile with that. So I think it applies in every capacity of life, but, especially in growing your business, which is your golden goose egg, your nest egg that you're hoping to plan for your family and next generations, like, just protect yourself appropriately. I think it's one of the best investments you can make.
100%. Well said.
Yep.
Oh, so did we touch on most of your story there? I mean, obviously you've grown to a pretty large brokerage.
So let's from 2012 to now, kind of our progression has been, we've got 7 brokers now. We cover US, Europe. We've done projects, Southeast Asia, Latin America as well. We do probably 30 to 40 deals a year. We pretty much touch everything from fully permitted and entitled dirt to $50 million Class A deals. We run the whole gamut. I sat on the national board, run a couple different state associations. I mean, we've kind of touched every end of this business that you possibly can. But it's been a wild ride the past 4 or 5 years in particular. Obviously, as if COVID wasn't crazy enough, we had insane rate hikes coming out of that. There's questions in the economy and stability, and coming out of that, then I'd say like Q4 last year, Q1 this year, dead quiet. No one's getting deals done. Debt's high. Sellers, waiting for that right time. Buyers are sidelining capital, waiting for a rate cut. We finally got one. I would say the last 60 to 90 days has been the busiest time we've seen in the space since 2021, which is awesome. Like we're here for it. We love to see it.
Which is, and I don't mean to cut you off, which is crazy too, because that rate cut didn't really affect the debt markets that we use, right?
No. And well, so
people are just watching the news.
Correct. And I think, I mean, look, the market is all socioeconomic anyway. Like it's just people's opinion of what's going on. But
right.
I think like CMBS, we have seen some big opportunities. We've seen like 5.8% CMBS loans, full term.
Oh, really? Okay. That's pretty good.
Yeah. We haven't seen that in a long time. I think too, these rate cuts, like a lot of people who are golden handcuffed to their houses are finally starting to think about moving again and trading, and which I think is fantastic. I think also too, there was so much sidelined capital that didn't get placed earlier this year and end of last year as well. It's just enough movement now to get them greased up and shifting out again. And I mean, we get sub 6% debt. I think everyone feels comfortable trading again. It's a point where buyers and sellers are happy moving. We can make that happen. We might get another rate cut in November. And then if we get another 50, 100 next year, like we're cooking. We're back down at 5, maybe sub 5. Like that would be unbelievable. So I feel very fortunate to be in this space. I think we've, quote unquote, kind of brushed the bottom of the storage market the last 3 quarters. We kind of saw a lot of oversaturation, a lot of oversupply, high debt. And now that debt's coming down, I think we can kind of see our way out of this, which is awesome. And it really puts us in a good position again for everyone to build, buy, sell, which is really fortunate given what we saw the prior 18 months. I mean, it went from a high to a stagnant, almost dead stop low for a couple quarters. So I'm very here for it. I think it's one of the best things we've seen in quite some time.
Yeah, for sure. You hit on a few things, but I wanted to kind of back up a little bit. Storage, and I got in storage in 2019, but even then it was like, I felt like I missed out on the surge, right? I missed out on the gold rush, but then COVID happened. But I remember hearing this, I don't remember who said it, but storage as an asset class was kind of in its teenage years pre-COVID.
Yep.
Since then, obviously, it's grown up. So kind of talk about, obviously, you've been in it in the industry forever. Talk about kind of where it's been in the past decade, last few years, and then where you see where it's going.
Love that question. So early 2000s is when we saw the first like private equity capital coming. GE got in the early 2000s, made a big splash. Obviously, global financial crisis hit. Coming out of that, we saw a lot of people start to be a little more attracted to the business. It did really well through the GFC, one of the only asset classes that did. And then in the early to like late teens, we saw this record just explosion in construction space. 2018, there was some debt market issues, things kind of paused. And then I think, to be honest, we would have been queued up for a little bit of a lull in the business or a little bit of recessionary times. COVID hit, and it was like someone threw match on the gas. I've just never seen anything like it. We were selling sub 4 cap deals, like record prices left and right. It was insane. And we didn't realize it until we're in the thick of it. Like it felt like it happened overnight. Like 2020 and 21 were just out of control. Obviously I wouldn't wish this economy we just went through all over again with rate hikes and stuff. But I think it was good in a sense in that it did kind of like bring the industry back down to like a little bit of a norm, a little bit of a break check of like, hey, we can't continue at this pace in perpetuity. Like, let's kind of resettle, recalibrate here. And I think it was good in the fact that people were just getting loose and silly with capital. We saw a lot of deals that I shook my head. I was like, I don't know how you're going to make money on that. I don't understand it. I just baffling. And now my brother and I, we're seeing so many owners come back to us now like, hey, actually I'm ready to sell now. And I'm like, your site's not worth what you paid for it. Like you're going to have to wait 3 to 5 years to maybe recoup your capital. Yeah. And they're like, well, why? And I'm like, well, you borrowed floating debt. You overpaid for an asset in an oversaturated market that has 50% declining street rates over the last 12 months. Oh, and there's 5 more sites being built and your occupancy went from 90 to 70%. I'm like, you literally have every factor in the world stacked against you right now. And not that we can't move for you, but it's not going to be at the price that you want. And a lot of people were pro-forming 10, 20% rent growth year over year over year over year, because we were seeing a lot of that during the middle of COVID, but they didn't take into consideration all these other factors. So I think the problem is storage is the best business I've ever looked at. We've looked at a ton of businesses, but the old saying goes, pigs get fat and hogs get slaughtered. A lot of hogs, and a lot of people just got a little greedy, a little over their skis. And look, we've helped a lot of people get out of deals. They've been able to wash themselves. They move on. That's awesome. But I think, again, this break check was necessary for the space, because we were starting to see some cannibalization go on in some markets, a lot of overbuilding, a lot of rough deals. And something that I always offer to people when I'm talking to them, whether they've been in the game for 20 years or they're just getting in now, I think a lot of people didn't take into consideration who their next buyer was when they were going to go sell their project. Because on paper, you can make anything pro forma well. That's great. You can get a deal in BFE, Alabama to be like, yep, we're going to exit $150 a foot. Great. That looks awesome on paper. Who's your buyer? Who's going to pay $150 a foot in Alabama? And I think that's something that I really try and echo in any room I'm in with buyers is, hey, you buy this deal at 60, you say you want to exit at $90 a foot. Maybe all the comps say more of it's $75 a foot. Like, who's your buyer at that $75 a foot mark when you want to exit this? And I think unless you're going to hold the deal in perpetuity, most people are IRR holders now anyway. They're going to sell it 3 to 5 years. You should already be thinking about that when you're underwriting your deal on the front end. And if you haven't thought about that, I really wish people would incorporate it now and get the right comps and get that in place, because it's one of the hardest things I have to have a conversation with. I'm like, well, who do you think is going to pay this price? Like, we don't have any comps to support this. The rates are down and things are sideways. And I think it's probably one of the biggest saving graces in piece of advice that I can offer to anyone buying sites or building in the storage space right now.
That's such great advice. Cause I don't know. I know going into it, I wasn't thinking like that at all, but even you can't buy a 20,000 square foot facility and expect to get, in Ohio, you can't expect to get $100 a square foot, because someone that's buying that 20,000 square foot facility is the same investor as you, the person that's buying it now, that's looking for value add. Obviously you have to really scale, and however that looks, whether it's one facility or multiple facilities, for a larger player to want to buy it. No one's buying 6,000, 10,000 square foot facilities on their own, unless you find another investor like yourself.
Correct. And I think too, it's, and not to overcomplicate the process, but even, if you sell it to someone, who are they going to then sell to? Where's their spread? So and I think a lot of times it's the conversation we have to have. Like right now, we chatted with another the other day. They're like, well, we're seeing a lot of stuff like these assets trade at the 7 to 7.5 cap rate range. I'm like, yes, because they have a growing population. There's meat on the bone. Maybe there's some expansion land. Like, you're 99% full, 98% economic in a declining market with stagnant street rates. Like, there's no juice left to be squeezed. Whoever buys this has to hold it in perpetuity. Like, there's no multiple exit for them. It's just a cash flow play. So this is probably more of an 8.5 cap deal or a 9 cap deal. And so it's showing that lens of 2-3 steps ahead, even of like, where does this deal go? And I think it's something that I try and push on the front end. And I hate to see some people just overpay for deals, because you can pro forma anything. You make anything look good. But I really want to stress to everyone in your markets, like, look who's trading, look what the bigger fish, the next fish is paying in your market. And just be like, is there enough spread on me, whether it's 60 to 75 or 45 to 60 or whatever that is? Think about that exit in mind, and not, pro forma yourself into a range that is never achievable in your market. Like you said, if in Ohio, you can go build for 60 to 70 a foot. Why would you pay $155 a foot for a 20,000 square foot site? You wouldn't. Build a brand new site. So I think that's something that I really, again, with the way that construction costs are now, the way the debt environment is, the way we see things stagnate, especially with these ECRI pushes in some of these markets, I just want people to be more cognizant about their process and who their exit is.
No, and that's absolutely great advice. And know going in on why you're buying and what your plan is. I don't think many people know what their plan is, right? I know for me, it was super simple. I was just collecting cash flow.
Yep.
I didn't care what my exit was in 3, 5, 20 years because I was just collecting cash flow. Now that's changed a little bit on how I look at it, but I'm still collecting cash flow. You got to figure out why you're buying, if you're exiting, when everyone's going to exit at some point, but when that is, how that looks, you got to plan for all that.
Yep. And I love you say that, because even sophisticated operators, we looked at some decks from some groups that said, hey, we're going to sell in the 4.5 to 5 cap rate range in 5 years. And I'm like, I don't think that you're going to get even close to that. And so it's not just a first timer issue. I think the industry as a whole just got a little over their skis through this time, but I'm really glad that you're able to put this out, John. And again, it's not just storage. It can be any business you look at. I think really thinking about the longevity, even if you're just starting it, like, what's my end goal? Who's my buyer? What's my timeline? Like, really thinking long-term with your strategy and seeing if you can help kind of build a business around that strategy.
Yep, for sure. So before we start to wrap up, I've got a few more questions.
Yep.
Storage usage, saturation. Obviously, and you brought it up, there's more developments now. I know the people like to use the square foot per capita. How many, people are using how many people are using storage in an area? I'm not crazy about that number, but obviously it is going up over time. So 10, 20 years ago, 10, 20 years from now, where do you see that going?
Yeah. So I think it's interesting because I still use 7 square feet per capita as the rule of thumb. When I first look at a project, that's my bare bones barometer. If it's higher or lower, then I'm like, all right, let's get into the weeds here and see it works. Because I've seen markets where 15 square foot per capita is saturation. I've seen markets where 3 square feet per capita is saturation. It really just comes into factoring in what the market occupancy levels are at, how our rate trends growing. And that's really what dictates at the end of the day, what number works. I think in a lot of markets now, we're seeing developers saying it's not just 7 square feet per capita, but like how much climate controlled square foot per capita is. So a market might already be at 9 or 10, but it's all traditional. And they're like, well, I'll build the first climate controlled site here because there is 0 square foot per capita in my mind. So we're seeing this shift away from just blanketing all of it together. People are starting to break out, different portions, whether it's boat and RV or climate or whatever it is, and being a little more minute in the details. But I think that's across the board in the space. We're seeing just a lot more thought. And again, as I said earlier, there's less room for error in the space more than ever with the level of competition and capital here. So I see that continuing to become more fine-tuned, detailed. I think development will continue to push, especially if we continue to see the debt drop. The forward SOFR curve is projecting another 100 to 150 basis points. That would be unreal in the next 2 years. Again, that gets back into the 5, maybe sub 5 range. So I could see construction continue to push, especially in these hyper growth markets, especially in the Southeast and the Bible Belt, the Huntsvilles and Tampas and Nashvilles of the world. I think we'll see those markets continue to flourish. And again, I think coupled with that, we're going to see probably I think my base rate, we're going to see a rise in microsites. I think we're seeing a lot of hub and spoke development from owners. And there's going to be this huge continued push of competition among the remote operators. I think now people are looking, all right, I may not have as much capital or as cheap of capital as this group, but I can run leaner than them, and I can do staffless, and I can use great products like Live Switch or copper management or tenant or whatever you're using to be more efficient in the way you're running your business and your store, and be more competitive in those markets.
Yep. And the 7 square foot per capita, which is average now, was it about the same 20 years ago? Were they tracking it? Any idea?
Yeah, like I said, my dad, I remember in 2001 or 2, we were looking at my dad was like big gut feeling guy. I remember driving by a piece of property. He's like, that's a great spot for a site. And I was like, why? And he's like, I just built enough of them. I know I'm going to build a site there. And that was what he did. Like, he just built a site there. And the guy he built it for still owns it, and it's worth a shit ton more than what he built it for. And it's wild though. Like, that just wasn't a thing for that generation. My dad was born in 1934. They just different way to do business. And now I can't imagine building anywhere without looking at some of the spreadsheets some of my clients have put together, 50 pages of dev model and saturation and working the finest tooth comb with bank terms. I think projects are just so much thinner these days. There's just no room for error. And so it's such a process. And I think one of the biggest complications we've seen, John, is not only saturation, but these larger REITs and larger players, the ECRI push, the effective customer rate income, where they've move them in at $5 and they jack up the rate 90% the first year. Those street rates have really messed with people's underwriting and understanding of a market, because you don't really know where the in-place rates are in those markets. And so I throw it as a cautionary tale out, like, make sure that you're not just relying on the street rate data. Make sure you really take a dive in whatever market you're buying or building in, that you are getting the true in-place rates in those markets. And it's a little harder to do, because unless you have a conversation with owners, or you get a third-party study done, which I always recommend when you're buying or building. But it really could make or break your deal, ensuring that you're going off the right data being in a new market.
Yep. 100%. Awesome. Before we get into our last three kind of podcast questions, anything else with storage markets that we need to know?
So I just came back from the FEDESA conference, which is the Federation of European Self-Storage Association. Spoke on a panel there in Stockholm last week. And for anyone who's kind of curious what's going on outside the US, high level, the UK and Euro storage markets are expected to double in the next 7 to 10 years. Currently just under about 5,000 sites between the UK and Europe. When you look at them population-wise, the US, it's pretty baffling. Like, they have less than 0.1 square feet per capita on average across Europe. And so I don't think that storage will ever be at a 7 square foot per capita in Europe. Like, everyone agrees that. But even if it just goes to 1 or 2, like, there's just a massive amount of storage that will be built. And I think, storage in those markets really started in the 2000s there. We're just seeing evolution into some of the Eastern European markets like Latvia and Lithuania, and it's cool to see, where they're at now, because that's where the US was back in the 70s and 80s. And so it's a really cool lens to see what's happening over there. I'd say dominant markets, UK obviously is leading the charge over there. Netherlands and France are probably right behind it. Germany has exploded in the past 10 years of storage development. So it's really cool to see kind of this transitionary space over there, and they're going through their first big turn of owners and seeing a couple exits. So it's really interesting to see what's happening there. And I'll give you some other tidbits across the world. So on my panel, Michael Tate with Storage King down in Australia, they've been around for decades. Storage has been existing in Australia, but they've doubled in the last 10 years. There's been an explosion of interest in the industry down there recently, which has been fascinating, because they only have 4 major markets. So they've really taken off down there. Frederico Roltz joined me from Guatemala. They're developing in Costa Rica, Guatemala, Dominican. And so there's this rise of storage development across Central and Latin America now. First time projects in some of these major cities, which is really interesting to track. And a lot of these markets, well, you have major debt issues or political hoops to jump through. So it's fascinating to track that. And then Kevin Chan joined me he had Store Friendly self-storage group out of Hong Kong. They were talking about in Singapore, where they've got a couple sites. Most of them, 95% of the projects there are leasehold from the Singaporean government, and they charge a luxury tax there, which basically means the government sees how well these businesses are doing, so they charge them an extra tax on top just because they can. So it's always cool to go to these conferences and see the headaches or the war stories from other parts of the world. But the U.S. is really seen as like the beacon of storage. It's where it all started, and it's cool to see these. Yeah. 10% of Americans currently use or have used storage. So it's cool to see other countries really look to us as where they're going to go in 10, 20, 30 years. So I always find it fascinating when I get an opportunity to speak at those events, and very thankful to be able to get over there and do it.
Yeah, that's very cool. One question based on that. Are they mostly doing drive up, or is it climate control? Is a mix kind of like us, or how's that look?
Depends where you're at. So, the UK, especially like in London, some of the sites I've walked through, you're walking down this corridor and up 3 stairs and down 3 stairs. I mean, it's kind of funky, but they have 100,000 square foot Class A dev deals in the middle of downtown London that they paid out the wazoo for. In Sweden, we went and toured a bunch of sites. Most of them had full drive-through aisles because of the winters there. So they, full pull-in parking inside, which is great. And then you think like the Asian markets, vertical. It's land is so valuable in Hong Kong and Singapore that you just, there's no 3-acre parcels that you just happen to own where you build 40,000 feet. You're lucky to get, 0.1 acre that you're going to leasehold for 100 years from the Singaporean government, and you're going to spend 80 million to build 8 stories up. So it's just a different world all over. The rates are insane. Like looking at, UK, Europe, a lot of markets are $30 plus a foot. Hong Kong, a couple of years ago, was like $90 a foot plus. I mean, it's just, and then in the US, I've looked at markets where it's like $5 a foot. So it's just, it's very different. And having to do euros in square meter conversions to dollars in square feet has always been a problem, but I'm getting better at it.
No, hey, as we were talking before we started recording, good for you for going across seas and trying to expand your business, but it's a whole nother world.
Yeah, it's fun. We've traded in the Netherlands and France over the past couple of years and done a bunch of deals over there. And it's so fun. And it's cool because it's all storage, but doing a deal in Texas and Florida doesn't, make any difference. It's all storage, but going over there, it's legal, it's currency, it's language barrier, it's cultural barrier. It's everything. It's literally a different world for doing a transaction. And, it's been really fun to navigate that, and we've certainly enjoyed it and looking forward to doing more abroad over the years.
That's awesome, man. Awesome. All right, let's get in the last few questions here. So what's one thing that you're better at than everybody else?
I would say that I can work a room better than anyone. I love chatting. Like I could talk to a brick wall. And one of my favorite things in the world, John, and it truly out of like personal interest, when I talk to someone, I love finding the one thing that we can connect on. It may be a language, it may be a game, it may be a town traveled to. Like I make it a personal goal of mine every time I talk to someone. I'm like, what's the one thing that we can find to connect on? Because there's nothing more fun than when someone lights up over that one thing you find to connect with them on.
Yep. No, I can attest to that because I know we met in Vegas, and after like 5 minutes, I'm like, have we been best friends for like 20 years? So you're really good at that. You're really, really good at that. You definitely connect. And that's definitely a superpower of yours.
Thanks, man.
What's next for you?
Next for me, continuing to grow the team, grow our footprint. I think we'll continue to expand, in Europe, Southeast Asia, and Latin America. It's wild. When I started, like doing a deal in Charlotte versus Wilmington was cool. And now we've done stuff from like Ho Chi Minh, Vietnam to Waxahachie, Texas. So we're just looking to continue to grow. I feel so blessed to be where I'm at. I can't believe it's been 13 years now of being in the game, but I think everything we've done has been super organic, and we're going to continue to see what God puts in front of us and see what happens.
Yeah, it's awesome. Awesome to see too. Obviously I'm a little biased, but I will say if you're looking to sell, obviously buy too, but reach out to John and his team. They're absolutely awesome. And I will say this recorded. You guys are, from what I've seen, the most definitely down to earth, but you guys don't BS anything. You guys are going to tell you, and you've even said it in this podcast, like if something doesn't make sense, you're going to tell them. Other brokers won't. They'll list it for $2 million and hope that you can sell it at 1.2. Yeah. You're realistic. You're great at what you do, and it's cool to see. So Thanks, with that said, where can people find you?
LindseySelfStorageGroup.com. You can email me directly, John@LindseySelfStorageGroup.com. Me or the brokers are available at any time. And John, I really appreciate it, man. I tell people all the time and mean it, whether it's you want to sell in 6 months or 6 years, I don't really care. We're here to help in whatever capacity that is. People have questions about rates in their market or recent comps, or you need debt referrals or vendor intros, like whatever you need, like we've been in the space a long time. We plan on being here for a long time. Whatever resource we can provide you, we'd love to be it. So feel free to hit me up for literally anything. If I can't help you, I'll find someone that can. And I appreciate you having me on today, man. It's been great as always.
Yep. No, and I can attest to that. You guys are definitely a wealth of knowledge, and you're just looking to help. So again, appreciate you coming on, man. Awesome show, and appreciate everyone listening. We'll see you guys next time.
Thanks for following, subscribing, and listening to this episode of the Do More podcast hosted by John Farling. To learn more or ask questions, go to l4investing.com.